Amazon, Apple, Microsoft, Tesla, they all closed at all-time highs. We're seeing the same rotation we saw yesterday and the day before happen again today. People are getting out of the laggards, the late recovery stocks, going back into the safe megacap stocks. It seems like megacap tech, back, different than the past, is now the safe play. You can put money in a company like Apple or Amazon and just park it there and just be safe. So in a time like this, people are now all of a sudden taking less risk. And a week or two ago, in the last 1 to 2 weeks, people were really going to the laggards, the banks, the cruise lines, the airlines. They were going to the laggards, the beaten up names that presented good value. Now those stocks have recovered. Now there seems to be a little bit more negative sentiment kind of brewing. Whoa, we're so high all of a sudden. And they're flocking back to the mega cap tech that they know they won't lose money in, that they can maybe get some return over, the long run if they're long-term investors, all that. So there's a more defensive rotation happening now as we approach the all-time highs again across the board. That said, there was some very good news that came out today from Federal Reserve Chair Jerome Powell. That's interest rates are expected to remain at zero until 2022. This is really good for overall business. Businesses are going to be able to get money that they need for expansion at essentially close to no cost. So that's good for economic expansion. It's good for productivity. It's good for the purchase of equipment. And most importantly, good for the economy. And in the past, I've talked about inflation, but he's saying we should be more humble about our ability to affect inflation. So maybe I'm a little too assuming that all of this cash creation is going to affect inflation. At the end of the day, inflation is the price level, not necessarily the amount of dollars in circulation. I do think the rich are going to get richer because they're in charge of the whole financial system, which is getting this injection. So we'll see what happens with that. But it seems like inflation may occur, but we're not even reaching our target of 2% inflation, which is a good sign for some people and a not so good sign for others. But my concern is if we're not going to see inflation, the stock market does feel a little too hot for me. But at the same time, interest rates are just staying at zero, which is good for companies that you're buying. They can get the capital they need without having to sell more stock and, increase the supply of stock in the market. So there's some good news going around. I don't think it's a catalyst for a rally, and the market didn't really think it was either. The news came out, the market dipped, and then it rallied, kinda. Not a rally, but shot up a little bit. Stayed there, and then kind of just gradually came all down across the rest of the day. Now, as for how the market's going right here, I think we're destined for a long-term bull run with the strength of the economic recovery that's happening, the strength of the jobs returning in May. I expect that to continue. That was a welcomed surprise. And I think overall we're going to get back to that long-term bull run. But in the short run, I don't really know. I don't think we deserve to continue hitting all-time highs and keep pushing up right now. The economy is way too far behind the stock market. That's fine. The stock market leads the current state of the economy. But I think the economy should recover a little bit so we're not at 13% unemployment and hitting all-time highs in the stock market. My concern is, and I don't know if this is going to end up being true, but that we saw a strong May jobs number, and then the next jobs number is going to be a little weaker, and then a little weaker, and then a little weaker. That would not be ideal. We want it to stay steady, X amount of jobs, 2.5 million jobs added, unemployment claims going down, some more jobs are being added, all that. So that's what we're hoping happens. We don't know if it'll happen. It could happen. It could not happen. We'll see what happens. So right now it's a little bit of a state of flux, and because of that, I really want to see the market flatten out like it was kind of doing mid-April to mid-May, and then optimism returned, states were reopening, the market rallied, and then the jobs numbers came out, and then the market rallied really hard towards the end. in the laggards, which pushed us up. And then that momentum has now ended. And we've reached close to the all-time highs. And NASDAQ keeps hitting all-time highs. Just closed at 10,000 for the first time ever. And it's like we don't really have a reason to keep pushing. You know, what we're factoring in right now is an economic recovery. I feel like that is baked into the cake. So if we keep pushing up, we're baking some other thing into the cake. You know, 0% interest rates for 2 years is something new. It's a little more frosting or some sprinkles, you know, but it's just sprinkles. It's not the batter. So I think we got to remain complacent at these levels. It's going to be volatile for sure. This is an easy time to be volatile. But there's got to be some consolidating in the stock market. People got to settle into their positions. They got to, not be buying and selling all the time. They just got to settle. They just got to settle into their positions. Decrease some of the volume that's out there. Settle into their positions, calm things down, watch as the economy begins to recover. Let's get the next unemployment rate to come out. What does June look like? Are we going to have an issue with people in July when unemployment insurance runs out? All of that. And then if things look good, we can continue on the long-term bull run. So right now, I just want to remain a little cautious, not too cautious, just a little cautious. I'm not saying we're going to have a massive pullback. I could see a pullback happening. I could see the next jobs report coming out very good, stronger than expected, and a rally pursuing and getting back to the long-term bull run earlier than I'm expecting. I'm kind of expecting, if all things go right, July, September, August kind of range, we can start getting back on that bull run. That's the optimistic case, maybe September, October. My one concern is the unemployment claims. We'll see what happens with that, but now it's kind of a wait and see. We got some sprinkles today, but we still got to be in wait and see mode. So no reason to sell. Could be buying. You might see a pullback. Might get a better buying opportunity. Not really a time to market time. It's a time to invest and be an active manager and start focusing on the news and seeing what's going on. So until next time, till tomorrow. Peace.